G'day there, Phil Robison here, and today I'm focusing on Port Augusta in South Australia. It certainly had some incredible growth between 2004 and 2008. In fact, it actually had growth of approximately 20% per annum, but since then, well, it's certainly been flat, but pundits are predicting that it's going to be coming back. So yeah, look, the highlights for the area included a number of renewable energy projects, in fact totalling around about $5 billion. British industrialist Sanjeev Gupta, who bought the Whyalla Steelworks, in fact is investing $1 billion in energy projects, and that's going to be driving his iron ore mines and processing plants. Now the government has also given approval to allow mining in the Woomera prohibited area, which is an area estimated to contain some $35 billion worth of copper, gold, uranium and iron ore. Now, whilst Port Augusta has been considered a long shot for investors in the past, the location I think may prosper in the future if some of these proposed energy and resource developments get underway. I think it's very likely. We are in a world that people are very, very keen about clean energy. The number of significant projects being targeted in and around Port Augusta has grown to levels that suggest that major economic growth is, well, it's inevitable. In fact, the Port Augusta City Council, they refer to the town as being the crossroads of Australia. And it is certainly, it's strategically located in terms of its logistics in South Australia. It's the launch point for the Stuart Highway linking up to Darwin and the highways that link to New South Wales and Western Australia. Now some facts. Well, currently the median property price in Port Augusta is $140,000. After certainly several years of negative growth, market research firm Propertyology, well, they've named Port Augusta as one of South Australia's potential hotspots. So they're tipping it to experience some investment growth between 2018 and 2021. Now, some of the key considerations are its affordability, it's got strong yields and low rental vacancies. In fact, I've been researching the area on behalf of a number of retirees who are chasing a better return than what's on offer from term deposits, which are less than 2%. I mean, you can't live off that. It's a pretty sad situation if you're a retiree at the moment. So we've been looking for a good cash return on their money. And after doing the maths, talking to local agents and getting my head around the numbers, the net returns we are seeing are upwards of 7%. So average rents at the moment are $240 a week, but duplexes in fact bring in around $370 to $445 a week, depending on the price of the property. And also the condition of the property. So excellent for those that are seeking a good cash flow property to add to their portfolio. Finally, in the past year, the 1 year growth for Port Augusta has been 4%, which is positive after several years of negative growth on the back of those years I mentioned before, 2003 to 2008, according to APM data. So, in summary, I think it's several of these approved clean energy projects. If they get commissioned, then I reckon Port Augusta could be one to watch. So more of a speculative investment, but certainly a cash flow strategy in the short term, but one that may well have some growth over the medium to longer term, particularly if these projects get up. That's Phil Robison from Phil Robison Property. Have a wonderful day and bye for now.